Namaskar students, welcome to GDCA College channel. Today's video is directly from nature, as you can see from surroundings. Anyways, today we'll see about account paper. What are the expected questions in the May 2026 examinations, and what are the parameters, or you can say on which topic questions are expected actually. So this question, if you do properly, if you go with the proper flow, then definitely you will get good marks in accounts, although you don't know accounts or whatever your concern is, but that doesn't matter actually. Again, one of the most important thing is about accounts, you can say, is whatever calculations you do during the balance sheet, during the profit and loss account, during the other accounts, you can say, or during the bill of exchange and everywhere. So whatever calculations you do, that calculations marks actually. So make sure that calculation you do, make sure wherever it is required, make a table, carry scale for a particular subject actually, to make your proper table, to make sure that table is more attractive. So so that examiner can get attracted towards your sheet, as well as whatever balance sheet you do, you make that has to be proper actually. So these are the particular or basic things you can do, and in this particular subject, you can say, or all subject actually, first question is compulsory actually to solve all the paper. So first question you have to solve at any cost. You cannot miss that question actually. Again, first question will be about there might give you a trial balance sheet, and from that you might have to make profit and loss account, then balance sheet and other accounts actually. So that carries equal marks. So always first question is for 30 marks, second will be of for 20 marks, then other questions will be of 10 marks likewise. So these are the proper things actually. So what you can do is you can divide your sections according to the required subject or required question, you can say. So this, in this manner you can do, you can apply your language. In your language you can do, you can make a table as per required question. Also make sure that you're more focused to this subject actually, and more importantly, this is very interesting subject. So far in the GDCA examinations, people most of the time people get scared, and most of the time people get fail actually. So you should not do that. You should not be afraid of this paper. So most of the important point here is be calm, be patient, and solve the paper correctly. You try to solve it in proper manner. But before that, as you know, as I know so far, I'm telling you that you have to practice to write the paper for 3 hours. So at least for 3 hours, you have to write to the point, in the particular subject, whatever subject is required. So let's get started then.
ध्येय नवीन समोर दिसतंय, बँकिंगचं स्वप्न पूर्ण होणार.
GDCA ची साथ जिंकायची ही वाट, यशाची गॅरंटी आता सुरुवात. GDCA कॉलेज
हो भविष्य उज्ज्वल,
GDCA कॉलेज
मिळणार यश.
सहकार आणि बँकिंग करिअर घडवा खास. GDCA कॉलेज देतंय यशाचा विश्वास.
So these kind of questions which will be coming in the examination. So first question, every year so far, it's been now last for 8 years. It's same actually. They will give you trial balance as on 31st March 2025 or 2024, 2026, whatever it is. So according to that, you will be given some cooperative society name, and they will ask you to make profit and loss account, balance sheet, and with the date and adjustments accordingly. So here are some of the examples we will see, like expected questions in the May 2026 examination. So these are the opening stocks, then purchases, then these are particulars which are given in the trial balance, and according to that, we have to we have to solve actually a profit and loss account and balance sheet. So as you know, guys, actually account is not my subject. Actually, I hardly know the account, but I'm trying to give you the expected questions. So these are numbers can be different actually, but question will be same. Profit and loss account balance sheet you have to make at any cost. You have to make sure that all calculations are correct. So likewise, will be given trial balance as on 31st March 2025. So in according to that, we have to make profit and loss account and balance sheet. So how it is going to be, there are some of the adjustments given, like closing stocks on 31st March 2025 is 42,000 rupees, depreciate furniture at 10% and building at 5% per annum, salaries adjusting, salaries outstanding 2,000 rupees, prepaid insurance 600 rupees, write off bad debts 800 rupees, and provide for reserve for doubtful debts at 5% on remaining debtors. Audit fee outstanding 1,000 rupees. Interest on bank loan is outstanding 9% per annum on 60,000 rupees. So these are the adjustments we have to do. So how will be the model answers in for this particular question will be, so we'll be making trading and profit and loss account. Likewise, debit side, credit side, we can make the we have to make actually a column for the to make profit and loss account accordingly. Debit side, credit side. So debit side opening stock was given 28,000 rupees, 28,500 rupees. Then these are the on debit side actually to purchase 2,60,000 rupees, less purchase return 2,60,000 rupees, to courage inwards so 4,200 rupees, to gross profit that is 1,74,300 rupees. So that total is coming up to 4,67,000 rupees. And for on credit side, sales, whatever sales are there, purchase, then purchase returns and inwards always comes on debit side, and sales, returns and closing stocks always on credit side actually. So sales is of 4,25,000. The less sales returns 4,25,000 rupees, by closing stock 42,000 rupees. So total it is coming 4,67,000 rupees. So this is what trading account is. Next is on debit side again. Salaries 42,000 rupees, add outstanding 2,000 rupees, so which is coming up to 44,000 rupees. To rent and taxes 18,000 rupees. To insurance 3,600 rupees, less period 600 rupees, that is coming for we have to less that 600 rupees from 3,600 rupees, that is coming up 3,000 rupees. Then next, to printing and stationery 2,400 rupees. To advertisement 5,000 rupees. Then to audit fees 8,000 rupees. Then add outstanding 1,000 rupees, that is coming up 9,000 rupees total. Then on the debit side, on the credit side actually, total gross profit that is from gross profit that we seen in the trading account, which is 1,74,300 rupees, that come as it is. Electricity expenses, then to general expenses 8,500 rupees. To bad debts 1,200 rupees. To new BD 800 rupees, less old RDD 1,200 rupees, add new RDD at 5%, that is 3,220 rupees, that is coming 40/20, that is 4,020 rupees. To depreciation on furniture 10%, that is 8,000 rupees. Building at 5%, 9,000 rupees. Total coming 17,000 rupees. To interest on bank loan, that is 5,400 rupees. Then to net profit transfer to reserve fund, it is 51,950 rupees. So the total is coming 74,300 rupees. 74,300 rupees on credit side, and debit side this is how it is going to be. Then next we have to make balance sheet for as on 31st March 2025. As I told you earlier, in balance sheet, liabilities and assets are mentioned always actually. So not credit on debit side, debits. So it is always liabilities and assets. So what are the liabilities? Share capital 3 lakh rupees, reserve fund 35,000 rupees, and net profit of 51,980 rupees. That is coming up 86,980 rupees. Salary creditors 38,000. Bank loan at 9%, 60,000 rupees. Bill payable. Outstanding salaries 2,000 rupees. Outstanding audit fee 1,000 rupees. Outstanding interest 5,400 rupees. So that total is coming up 4,93,380 rupees. Next, as in assets, building is an asset actually. That is at 1,80,000 rupees. So less depreciation at 5%, that is 9,000 rupees. So we got to reduce that from 1,80,000. It is 1,71,000 rupees. Furniture at 80,000 rupees. Then we have to, as given, depreciation at 10%. So it is 8,000 rupees, 72,000 again. Investment 25,000. Closing stock 42,000. Sundry debtors that are at 65,000 rupees. Less new 800 rupees. Then less new RDD at 3,220 rupees. That total is 60,980 rupees. In cash in hand 4,500. Cash at bank 18,000 rupees. Investments 25,000 rupees. Here we can see investment 25,000 rupees. Then period insurance is 600 rupees. So total is coming 4,93,380 rupees. So it is how this is how balance sheet can be. So next, second question will be of write a short notes on any four. They might ask you actually, and for short notes you have to at least write half page for one short note, or you can say 1/3 of the page actually. So that you will get at least good marks actually, 5 marks each question. So most expected questions are like reserve fund, most expected questions in short notes. Then depreciation and its methods. So these are most expected question actually. So whatever questions I'm giving you from this sheet, it is for sure, you will get at least 40 marks paper actually. So you can, imagine like how important this is. Reserve fund. This question is most expected actually. Reserve fund is an amount set aside from net profits to meet for future contingencies, losses, or specific purposes, like in cooperative societies. As per the Maharashtra Cooperative Society Act, it is compulsory to transfer a minimum of 25% that we have seen in CHM as well, net profit of to the reserve fund every year actually. So types of reserves are like statutory reserve, that it is mandatory by law. General reserve for general purposes, social reserve for specific purposes, example building funds, likewise. Then secret reserve fund, it's not visible in balance sheet actually, but it is in the it is there in the society, cooperative societies. Reserve fund is shown on the liability side of the balance sheet. It strengthens the financial position of the society, ensures financial security, and builds confidence among the members and creditors. So this is this much how you have to write actually. So if you know more, you can write more as well. You can give some other examples as well related to reserve fund. Next, second question will be depreciation and its methods. So this question will be coming actually. So depreciation and its methods, most expected question. Depreciation is a gradual decrease in the value of a fixed asset due to use or passage of time, wear and tear, or obsolescence. It is a non-cash expense charged to the profit and loss account. That PNL is terms as profit and loss account. Anyways, um, what are the methods? Number one, fixed installment method, that is SLM, straight line method. Equal depreciation charge every year on the original cost. Formula for depreciation cost, how to calculate it? Cost minus scrap value divided by useful life, actually. So life in the sense like year, actually, or time, you can say. So second one is reduction balance method, that is WDV, write down value method, you can say. Depreciation calculated on written down value each year, given decreasing amount, highest in the first year, decreasing thereafter. Actually, every year value of the depreciation will be reduced in the WDV, that is written down value of method. Next, third one, bank reconciliation statement. This also is important, actually, because on this also they will ask you question to solve the bank reconciliation statement, that is BRS. Bank reconciliation statement, that is BRS, is the statement that explains the reasons for the difference between the balance as per cash book and the balance as per passbook on given date. Main reason for differences, like number one, checks deposited but not cleared, not yet cleared, you can say. Checks issued but not presented for payment. Bank charges in passbook only. Interest credited by bank in passbook only. Then direct deposits not recorded in cash book, actually. So important, what is the importance of BRS? That is bank reconciliation statement. BRS helps detect errors, prevent frauds, ensures proper control over the bank transactions, and verify the accuracy of cash records. So this is how these are the importance of the BRS. Number four, verification of assets. Verification means physically examining the assets and liability shown in the balance sheet to confirm their existence, ownership, and correct valuation. Objective, what are the objectives of it? Number one, verify actual physical existence of assets. Number two, confirm legal ownership of the particular assets. Then number three, check fair and correct valuation. Number four, detect frauds and misappropriation in the in assets, or you can say on the asset. Ensure the balance sheet presents a true and fair view. Next difference is valuation is equal to determining the value of assets. Then verification is nothing but physical examining and confirming the asset. This is carried out by auditors during the annual audit. Number five, cash flow statement. Cash flow statement is a financial statement showing cash inflows and cash outflows during an accounting period. It is governed by AS3. There are sections, operating activities, cash from main business like sales, purchase expenses. Number two, investing activities, cash from purchase, sales of fixed assets and investments. Number three, financing activities, cash from capital loans and dividends paid. What are the importance of the cash flow statement? Reveals the actual cash position of the business, profit and loss account, use accrual basis, and does not show actual cash movement. So BRS helps in the short-term liquidity planning and helps management take decision regarding cash requirements. So this is what you have to do. Actually, you have to read properly if you are writing in English. Next, number six, income and expenditure account. Income and expenditure account is prepared by non-profit organizations such as charitable trust, clubs, hospitals, and schools. It is similar to the profit and loss account, but shows surplus, that is income is greater than expenditure, or deficit, expenditure greater than income. So features, what are the features of it? Only revenue income and revenue expenditure are included. Capital terms, number two, capital terms are excluded. Number three, prepared on accrual basis, differences from the receipts and payment account, that is profit and loss account, shows all cash transaction, while income and expenditure account shows only revenue transactions. The surplus slash deficit is transferred to capital fund. Number seven, subsidiary books. Subsidiary books are special journals maintained to record specific type of transactions separately, reducing the burden on the main journal. So number one, first purchase book, number two, sales book, number three, purchase return book, number four, sales return book, number five, bill payable books, number six, bill receivable books, number seven, cash book, number eight, petty cash book, number nine, general journal. So likewise, advantages: save time, allows division of labor, easy detection of errors, then facilitate audit, and internal control, enables a specialization of accounting staff. Number eight, new expected. Actually, this can be NPA account. They might ask you to write short notes on NPA account, that is non-performing assets. A non-performing asset NPA is a loan or advance where the borrower has not paid interest or principal for more than 90 days. Types: substandard assets NPA for less than 12 months. Then number two, doubtful assets NPA for more than 12 months. Number three, loss assets, no recovery possible, write-off recommended. These are the three types of NPA. What are the impacts if NPA comes in action? Reduces bank profitability, requires mandatory provisioning as per RBI guidelines, weakens capital adequacy. Then rising NPAs advisorly affect the banking sector and the overall economy. So these are the 8 expected tips actually. So as I told you, like I'm not good in accounts, so I can't explain much, the terms. So maybe I'll try to explain it more in, one by one every day. Next, bank reconciliation statements. This question will be in the May 2026 examination. So given some of the they might give you some details, and from that we have to make a bank reconciliation statement. So from the following details of Saraswati Cooperative Society in Nasik, prepare a bank reconciliation statement as on 31st December 2025. Balance as per passbook, the 1,85,000 rupees credit balance, that is CB we mentioned. Checks deposited in bank but not clear, 28,000. Check issued to member but not presented for the payment, that is 32,000 rupees. Bank charges debited by a bank but not recorded in the salaries. Bank charges debited by a bank but not recorded in society's book, that is 450 rupees. Interest credited by bank but not recorded in society's book, 3,200 rupees. There was a wrong credit in passbook, that is of 2,500 rupees, 2,500 rupees we can say. Direct deposit in our bank account by member, that is of 5,800 rupees, not in cash book. So what can be the model answer for this particular question? So as you can see, in bank reconciliation, we got to add, make a column, and then we have to make sure that we divide into 3 parts. So number one, particulars. Then number two is plus account and minus account. So debit or credit, you can say. Then balance as per passbook, which is given here, 1,85,000. You can say we have to write in the plus account. Add checks issued but not presented for payment, that is of 32,000 rupees. So again, we have to plus these two amounts, and that is coming up 2,17,000 rupees. Less, so less is like, check issued but not presented in account. So we have to make sure that the check has not clear, deposited but not clear, that is of 28,000 rupees. We have to again reduce that 28,000 rupees. Then less bank charges debited in passbook only, that is of 450 rupees. Then a wrong credit in passbook, that was of 2,500 rupees. Then next, add interest credited by bank is of 5,200 rupees. 20. Then next, add bank deposits by members not in cash book, that is of 5,800 rupees. So total as per cash book balance as per cash book will be of 1,95,050 rupees. So next question 3B, that will be of bill of exchange. Either of this two question will come, bank reconciliation or bill of exchange. So these are the questions will be there in the May 2026 examination. On 1st January 2025, Ramesh drew a bill of 10,000 rupees on Suresh for 3 months of for the value received. Suresh accepted the bill on the same day, that is on 1st January actually. The next, then on 15 January 2025, Ramesh discounted the bill with his bank at 12% per annum on the due date of 1st April 2025, that is of after 3 months actually. So Suresh honored the bill, past journal entries in the book of Ramesh. So what will be the model answer for bill of exchange will be? So dates, particulars, that is journal entries, then credit and debits. So these are these things we have to mention actually. On 1st January 2025, bill receivable account debit to Suresh accounts being bill down on Suresh for 3 months, that is of 10,000, which is given already. Then on 1st January 2025, Suresh entry Ramesh account debit, that already here it is mentioned same actually. So Ramesh account debit to the which has been accepted by Suresh, that is of 10,000 rupees. So credit 10,000 credit here, and then again debit of 10,000 rupees. On 15 January, bank account debit of which is coming again on discount account, debit to bill, that is at 12%, which is already given in the question. So receivable account 12% per annum. So for 9,600, that total 4,000 rupees. So that is coming off 10,000 rupees. So credit 10,000 rupees, again debit of 10,000 rupees. On 1st April 2025, due date honored, that is bank account bills sent for the collection accounts being bill honored on the due date, that is of 10,000 rupees. On 1st April 2025, on 1st April 2025, if dishonored, Suresh account to be to bank account nothing. Suresh account to bank account noting charges account being being bill dishonored plus noting charges, that is of 10,000 rupees, which is of 10,000 plus 100 rupees. So note what is the note due date 1st January plus 3 months plus 3 days grace period, that is of 4th April 2025. Discount 10,000 into 12. 12% into so it is asked for 3 months, so 3 by 12 will be there, and that is of approximately 300 rupees RS, so approximately 400 with the grace period. So as you know guys, actually account is not my subject actually, so that's the reason I'm unable to explain you in detail. So anyways, other subjects I'll explain it to you in detail, don't worry about that. Question 4, machinery account. So that question 4A will be asked like machinery accounts. So it might be asked like computer accounts or machinery accounts likewise. So if there is a question like this, how we have to solve it? A company purchased machinery for 90,000 on 1st April 2022 and decided to uh, depreciate at on 10% per annum under fixed installment method. Company books are closed on 31st March every year. On 1st October 2024, the machinery was sold for 38,000 rupees. Prepare machinery account for 3 years, that is of 2022, 2023, 2023 to 2024, then 2024 to 25. So what will be the model answer? Debit sides and credit side. Debit sides, the machinery account for the first year, that is of April 2022, 1st April 2022 to 31st March 2023, will be of 1st April 2022 to bank balance to the old balance in accounts, which is just 90,000 rupees. And then credit sides 31st March 2023 by depreciation at 10%. So 10% of 90,000 is 9,000. You got to add that one. 90,000, 9,000 rupees we have to reduce from the current balance actually. So here I can say SLM method is used. So 9,000 every year we have to reduce. So on 31st March 2023, closing balance will be 81,000 rupees. So, in balance, actually, you can say here 90,000 as it is. You can mention add 9,000 plus 81,000 rupees. Next, then machinery account for second year. 1st April 2023 to 31st March 2024. 1st April 2023 to balance, that is balance old balance account, that is of 81,000 rupees, that we have to carry forward here again. And again, depreciation is for the original cost actually. So 9,000 rupees we have to again reduce from 81,000 rupees. So on 31st March 2024, depreciation at 10%, that is SLM straight line method. So 9,000 rupees we got to reduce from 81,000. So it is coming up for 72,000 rupees. So 81,000 here, and then we got to add that to tally this account. So 81,000 rupees here also same coming. Then machinery account for third year is a little bit different we can say. Here 1st April 2024 to balance, that is of 72,000 is old balance actually. So here we have to mention that as in the third year. And again, what said in the last third years, that is of in 2024. On 1st October 2024, in question, it is already said that 1st October 2024, the machinery was sold for 38,000 rupees. 38,000 rupees it has been sold. So we have to write it, that is sold as like sales actually. So it is always on the credit side of the machinery account. So 1st October 2024, we have to mention that date here as it is, and then sale account by bank account to 38,000 rupees here we have to mention. Then on 1st October 2024, by profit and loss account is of 4,500 already given on the in the question. 31st March 2025, depreciation of 4,500 rupees remaining for the year. And on 31st March 2025, balance will be of 25,000 rupees. Total is 72,000 here to 72,000 as it is, because on debit side there is nothing to add. What are the working notes here? Annual depreciation, it is said that like straight line method, because here it is already mentioned that March every year, actually every year it will be same, that is fixed installment method. Fixed installment method means nothing but SLM, that is straight line method. So don't get confused in between. Then working notes, annual depreciation, that is SLM, that is fixed line method you can say, or straight line method. 90,000 by And 90,000 was the initial cost, and then we have to multiply it by 10% is equal to 9,000 rupees per year. So written down value, that is of 1st April 2024, 90,000 minus 9,000 minus 9,000 is equal to 72,000 for 2 year. Second year actually. To write down value on 1st October 2024 for 6 months, we got to calculate it for 6 months, because on 1st October 2024 we sold the machinery for 38,000 rupees. So it will become it will be of calculated for 6 months only. So we don't have to calculate it on the 72. We don't have to calculate it for 72,000, because it is already mentioned in the question, that is SLM, straight line method or fixed line method. So we have to calculate it for 90,000 rupees only. So 9,000 into 6 divided by 12, so is equal to 72,000 minus 500 rupees is equal to 67,500 rupees. Half of the 900 will be 4,500 rupees. 9,000 rupees, half of the 9,000 rupees will be 4,500 rupees. Loss on sales, that is written down value, that is of 67,500 rupees minus sales prices of 38,000 rupees is equal to 29,500. That is transferred profit, and this amount will be transferred to profit and loss account, because it is already, we have sold the the machinery with the WDV, that is written down value. So whatever balance will be there, that is of 29,500, it will be automatically transferred to profit and loss account. Question number 4, simple cash book. Make a simple cash book for particular given entries. So we got to do that. Prepare a simple cash book in the books of Sanjay, month of January 2025, from the following transactions. 1st January, started business with the cash 50,000. 3rd January, purchased goods for 60,000 rupees at the trade discount of 10%. 5th January, obtained bank loan 30,000 rupees and invested in business. 10th January, withdrawal cash from for the personal use of 5,000. Maybe amount can be different actually. So we just we are just taking chances that these amount might come. Then 12th January, cash sales on 18,000 rupees. Next, 20 January, paid shop rent 3,000 rupees. 20th January, paid salary 4,000 rupees. 25th January, received interest from bank, that is of 1,500 rupees. So what will be the model answer for simple cash book will be 1st January to capital account, that is of he started business, so that comes under capital account. So it will be straightforward to the debit sides, which is of 50,000 rupees. Then 5th January to bank account, which is loan obtained, so it is again comes to the, because loan we have taken from the bank, so that comes under debit account, so which will be of 30,000 rupees. 12th January to sales account 18,000 rupees, that also because we invested, sorry, we can say that to sales account, the cash sales of 18,000 rupees, that comes under debit side. 25th January to interest on the particular amount from bank is of 1,500 rupees, that interest received, so it is again comes to the debit side of the balance sheet, or we can say a simple cash book. On 31st January, closing balance will be of 42,000 rupees, so we got to make sure that the same thing will be there. So according to that, then credit sides, what will be the credit side on 3rd January? We purchase whatever goods required for a particular thing, we purchase at 10% of discount, trade discount, so which is of for 60,000. So trade discount is of 10%, which will be of 6,000. So we got to reduce it, and so that this comes straightforward 54,000 rupees. Then on 10th January, by drawing account personal use will be of, because it comes under credit side, 5,000 rupees. And 20th January, shop rent will be 3,000 rupees. Then next 28th January, salary 4,000 rupees, 31st January closing balance 35,500 rupees, 33,500 rupees. So no trade discount of 6,000 is equal is applicable actually. So how we have calculated that 60,000 on 10% of 60,000 is not recorded in the simple cash book. So net purchases of 54,000 is recorded. Question 5A, true or false? This question will come actually, or else you can say fill in the blanks or match the pair. So these type of question 100% will come in the examination. So with reason we have to write actually true or for whatever true or false asked in the examination. So first statement, trial balance is the total of debit and credit balance of all accounts. It's true because trial balance it's all debits and credit balance to check arithmetical accuracy of the book. Then next one will be trade discount is recorded in the book of account, which is false. Actually, trade discount is never recorded in the never recorded. Only cash discount is recorded in the book. Next, dividend is paid out of from profits only. Yes, it is true because always dividend always paid from the profit accounts only. Dividend cannot be paid from the capital because capital is the no in a company's you can say liability assets. Dividend cannot be paid from capital. It is paid only from distributable profits. Goodwill is a tangible asset of the business. It is false actually because goodwill is not tangible because it is intangible asset of the company. You can say it cannot be seen or touched. Closing stock is valued at cost or market price, whichever is less. It's true because this follows conservatism or prudence concept. Always record at the lower value. Shareholders are the owner of the company. It's true. Shareholders buy shares and hence own the company proportionately. Next, balance sheet is an account. It's false because balance sheet is a statement. You can say it's not account. Balance sheet is a statement, not an account. It is. It has no credit and debit sides. As we know that in balance sheet it is always profit and loss. Always liabilities and assets and liabilities mentioned, not credit and debit sides. Cash account always shows debit balance. It's true. Cash on cash. It's true because cash can never be negative. Hence, cash account always shown on the debit balance. Under WDV method, that is written down value method, depreciation amount is equal every year. It is false because in SLM it is same actually. Under WDV, that is written down value, depreciation decreases every year as it's as is on written down value. Debenture holders are the creditors of the business. It's true. Debenture holders lends money and they are the creditors, not owners of the company. Receipt and payment account shows profit or loss. It's false because profit and loss account is different and receipt and payment account is different actually. Profit and loss account shows only cash inflows and outflows. It's not shows the profit and loss. So in dissolution of the company, creditors are paid at last. It is false actually. In dissolution, shareholders are paid last, creditors are paid first actually. Due to amalgamation, management expenses can be reduced. True, it is because merging reduces the duplicate departments, administrative overheads, and the cost. Computer accountancy saves time. Yes, it is true. Computerized accountancy reduces manual work, save time, and reduce errors. Gross profit ratio is equal to gross profit divided by net sales into 100. So it's true because it's asked the the formula of gross profit. This is the standard formula for net sales minus sales returns. Then question 5B, fill in the blanks. As I told you, this can become this year because either match the pair or fill in the blanks. Dash discount is shown in the book of accounts, which is trade discount, is not shown actually. Trade discount is not shown in the account. Gross profit ratio is equal to gross profit divided by net sales into 100. Net profit ratio is equal to net profit into net sales. Net profit divided by net sales into 100 rupee. 100. Capital account is the personal account. Yes. The amount of dash check is not paid in the cash. That is cross check. Bank overdraft is shown on the liability side of the balance sheet. Dash means evaluation of social performance of an organization, that is social balance sheet. Accounting standard AS25, accounting balance AS22 deals with the taxes and on the income. Goodwill is dash and dash assets actually. Goodwill is an intangible and fixed asset. When dash ends, dash starts. Debit, when debit ends, credit starts, or vice versa. Then contingent liability should be shown in dash. That is a note to accounts actually, or footnotes. Profit and loss account and balance sheet of cooperative society prepared in dash form, prescribed or I form. Woman on whom bill is drawn is called dash drawee. Entrance fees should be transferred to capital fund or reserve fund. Cash book does not shows a credit balance. AS1 deals with disclosure of accounting policies. AS2 deals with the violation of inventories. AS6 deals with the depreciation accounting. AS10 deals with the accounting for fixed asset only. AS13 deals with the accounting of investments. Then next fifth question, match the pairs. AS1 dissolver of accounting policies. AS2 violation of inventories. AS6 depreciation accounting. AS9 revenue recognition. AS10 for fixed asset relates to depreciation fixed asset. AS13 accounting for investment relates to investments. AS16 borrowing cost. Drawer who draws or write the bill. Drawee on whom bill is drawn or who accepts the bill. Grace days 3 days extra after maturity of the bill. Goodwill is intangible fixed asset. Interest amount is nominal account. Then trade discount does not appears in the book of account. Father of computers, Charles Babbage. Additional, expected ratio analysis actually, because this we are just trying to get some of the questions actually which can be asked. From the following information, calculate gross profit, net profit. That carries maybe 10 marks actually. Stock turnover ratio, current ratio, and liquid ratio. So net sales of 14 lakh rupees, gross profit 3 lakh 50,000, net profit of 1 lakh 75,000, COGS of 10 lakh 50,000, opening stock 2 lakh rupees, closing stock 1 lakh 50,000, current asset 4 lakh 50,000, stocks 1 lakh 50,000, current liabilities 2 lakh 25,000 rupees. So first to calculate gross profit, GP is divided by net sales into 100. That is what is the calculation? That 3 lakh 50,000 divided by 14 lakhs into 100, which results into 25%. Net profit ratio, NP, is divided by net sales into 100. That is 1 lakh 75,000 divided by 14 lakh rupees into 100. That is coming of 12.5%. Stock turnover ratio, that is costs divided by average stocks. That is 10,050 lakh rupees divided by 75,000 rupees. That comes 6 times. Current ratio, current assets divided by current liabilities. 4 lakh 50,000 divided by 2 lakh 25,000. That is 2:1. Liquid/quick ratio, CA minus stock minus period, that is CL, 3 lakh divided by 2,25,000, that is 1.33:1. So average stock is equal to 2 lakh plus 1,50,000 divided by 2, that is far as 1,75,000. Liquid asset, current assets minus stocks minus prepaid is equal to 4,50,000 minus 1,50,000 is equal to 3 lakh rupees. So all the best for your examinations, guys. So that's all about accounts paper number 2, expected questions in May 2026 examination. We'll see you next video, which will be about audit subject and papers 2025. We will be trying to solve that paper in detail, about audit and all. Till then, subscribe to our channel, share this video with your friends, colleagues who are able to or who want to give examination in May 2026 or who are appearing that examinations. To those students, you can share that this video, and all the best for your examinations. We'll see you in next video. Till then, namaskar.